Right, so hi guys, in this video I'll be talking about what are my favorite stock market sectors to invest in. So a lot of people wonder how I'm able to beat the stock market over the long run. And the answer is pretty simple. I simply buy stocks that are within stock sectors that beat the market over the long run. And so by ensuring that my portfolio consists mainly of the best sectors, that's how I consistently beat the market. So this is one of my trade secrets I'll be sharing with you today. Now, in case you don't know, if you simply buy the market, which means you buy the S&P 500 index, you will definitely make money over the long run. How much would you make? Well, you can see, for example, for the last 10 years, from 2010 to 2020, the S&P 500 ETF, which is the SPY, something you can buy on any brokerage platform, that has grown at 198% over 10 years. Now, if you annualize that, that would be roughly 11.56% returns a year without dividends. Now, this ETF pays dividends as well. You get cash dividends. If you include the dividends, you get an annualized return of 13.91%. So in other words, anyone can get 11 to 13% return a year, at least in the last 10 years, simply by buying the SPY. This is the no-brainer way of investing. So a complete moron, a one-legged monkey, can make 11 to 13% just buying the index ETF. Now, the tough thing to do is, how do you beat the index? How do you construct a portfolio of stocks and ETFs that can do better than this? And again, the key is knowing which sectors historically are able to beat the index. Now, some of you may be wondering, what's a sector? Okay. Now, if you take a look at all the stocks in the stock market, they can be divided into these sectors. You've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 main sectors. So you've got the energy sector, materials, which is also known as commodities, industrial sector, consumer discretionary, also known as consumer cyclical, consumer staples, also known as consumer defensives, healthcare sector, financials, technology, communication services, utilities, and real estate. Now, within the sector, you can buy the best companies within those sectors, or you could simply buy the whole sector by buying the sector ETF. So, for example, for energy, the ETF ticker symbol XLE. For materials is XLB, right? So materials, by the way, is the same as commodities. So what are the stocks within each sector? Oh, by the way, if you look at a sector, they can be further divided into sub-industries. So for example, if you take a look at the financial sector, it's made up of brokerage industries, right? Brokers like TD Ameritrade, Interactive Brokers, Tiger Brokers, Momo. These are all brokerage companies. You've got asset managers like BlackRock, like Fidelity, for example. You have got banks like JP Morgan, Goldman Sachs, Morgan Stanley. You have got insurance companies like MetLife. All right. So let's take a deeper look at the different industries and the different stocks that make up those industries. So there you go. So over here, for example, you can see again, technology makes up a big part of the whole market. What you're seeing here are all the 500 companies in the S&P 500. So a big part of the S&P is made up of technology companies. This is an entire sector in terms of market capitalization, right? Now again, within technology sector, you have got software companies, right? Like Microsoft, Adobe, Oracle, to name a few. You've got consumer electronics like Apple that makes up the majority of that one industry. You've got semiconductors made up of Nvidia, AMD, Intel, Qualcomm. All right. You've got software, which is made up of Salesforce, ServiceNow, Intuit. All right. You've got communication devices like Cisco systems, and so on and so forth, right? So that's the whole technology sector. So within technology, which is the biggest company that makes up technology? Apple, followed by Microsoft. And then you've got the communications sector, which is made up of the biggest, Alphabet and Facebook. And you've got Disney as well, Netflix, And within the communication services, you have got telco, which is a subset of communication, right? Like you've got Verizon, all right, T-Mobile, okay? And then you've got consumer discretionary, also known as consumer cyclicals. So some of you may think that Amazon is a technology company. Wrong. It's not a technology company. It uses technology, but Amazon is actually a retail store. It's an e-commerce company. So it's actually within the consumer discretionary sector. Same with Tesla. Tesla is not a technology company. It's a consumer discretionary company. So is Home Depot, so is McDonald's and Nike and so on and so forth. And again, like McDonald's, Starbucks, that's under the restaurant industry within consumer discretionary. Then you've got consumer defensives, also known as consumer staples. Within this whole sector, you've got discount store industry. For example, Walmart, Costco, Target, these are discount stores. You've got household and personal products like Procter & Gamble, like Estee Lauder, like Clorox. You've got beverages like Coke and Pepsi. And another very big sector within the market would be financials. Financials is a huge sector. You've got your credit card companies, Visa, MasterCard. You've got your banks, JP Morgan, Bank of America. You've got your asset managers, you've got your insurance companies, right? And healthcare is another very big sector, which are made of, again, drug manufacturers. You've got healthcare insurers, you've got medical devices, so on and so forth. So companies like Johnson & Johnson and Pfizer and Merck, these are under healthcare. And then you've got industrials. So industrials, all kinds, aerospace. You have got industrial machinery like Caterpillar, like General Electric, like Honeywell. And what are the very small sectors in the market? Small sectors in terms of the market size would be energy. Now, energy used to be a big sector, but now it's really small. So energy would be things like oil and gas, right? Basic materials, which are basically commodities, aluminum, silver, metals, right? And you have got utilities as well. So this is an overview of the different sectors, the different industries, and the different companies that make up those industries. So which are the best industries or the best sectors to invest in? Well, basically, these sectors can be divided into three main groups. So the first group are the defensive sectors. So what are defensive companies and defensive sectors, right? These are companies where they sell a product or service that is a necessity. So in other words, it is recession proof. For example, think about it. In the worst recession, do you still have to buy drugs if you're sick? Yes. Do you still need medical equipment and supplies in a recession? Yes. So for example, healthcare is a defensive sector. It's recession proof. Another recession proof sector would be consumer staples. These are things that you use every day, like again, shampoo, soap, toothpaste, sanitary pads, tissue paper. And again, whether it's a recession or economic boom, you still buy these products. And third would be utilities. Again, recession proof. You always need water, you always need electricity, right? So the thing about defensive sectors is that the good thing is they're recession proof. So during a bear market, during a recession, these companies don't go down very much. In fact, they may even go up during a market crash. So in your portfolio, you want to have some of these defensive sectors to defend your portfolio so that when the rest of the stocks are going down, these guys are going up, okay? But during an economic boom, defensive stocks, they tend to grow less than other stocks we're going to talk about, right? So in other words, these sectors tend to be low volatility, but low to moderate growth, but they are recession proof. So again, you have got healthcare, and healthcare would include like biotechnology, pharmaceuticals, hospitals, medical equipment and supplies. And again, there are many companies within this sector. Some of my favorites would be Johnson & Johnson as well as United Health. Now again, bear in mind that just because it's my favorite doesn't mean that you should buy it right now. Why? You see, to be a successful investor, there are 4 keys that I keep teaching my students. There are 4 keys. Number 1 is knowing what to buy. Number 2 is knowing when to buy. Number 3, knowing how many shares to buy. Number 4, knowing when to sell, right? So while I can tell you what I like to buy, but you must know exactly when to buy. If you buy a great company at the wrong time, you're going to lose money, okay? So you're going to buy it at the right time, which is you buy it when it's undervalued, when it's at a support level on the chart patterns. You must know how many shares to buy to balance your portfolio. And you got to learn also when to sell to lock in those profits. And of course, all that we cover in depth in the courses in my community, right? But for now, I need to know what are the favorite companies I like to look at. Consumer staples. I love this sector as well. What are my favorite companies? My favorite companies would be Procter & Gamble, as well as Pepsi. Now again, bear in mind that these are not high growth companies. They are very low growth. They grow very slowly, but they are recession proof. They are defensive. So it's good to have some of them within the portfolio. Now, how about utilities? Utilities would be like electricity, gas, water companies. I don't like this sector. It's really boring, right? So I never touch any companies within that sector at all. So these are the defensive sectors. Let's move on to the complete opposite of defensive, which are cyclical sectors. So cyclical sectors are companies where they make a lot of money when the economy is booming. They make huge profits. But when the economy goes into a recession, like for example, during the pandemic recession, they make less money or they lose a lot of money. So their sales and profits are not that consistent. It's kind of like big ups and downs. So if you look at many of these companies, their profits and their stocks tend to be like, whoa, really up and down in this way, right? So very high volatility, but during an economic boom, they tend to fly really fast. But during a market crash, they drop like flies, right? So what are the cyclical sectors that go through huge ups and downs? You have got basic materials, which are commodity companies. Companies that manufacture chemicals, building materials, paper products, engage in commodity exploration and processing. For example, Dow Chemical, which is in chemicals, okay? Nucor, which is in steel. Alcoa, aluminum. Monsanto, fertilizer. Do I like this sector? Not at all. So I avoid this sector at all costs. If you notice, I never ever buy stocks within the basic materials sector. Why? Because I find that many of the companies in this sector, they have very high debt. Number 1. Number 2, they are very competitive. They don't have strong economic moats and their profit margins can be very thin. At the same time, their fortune depends a lot on commodity prices, which are very hard to predict. So their sales and profits are very unpredictable. So I hate this sector. Never touch it at all, right? Now, the next will be the financial sector. Again, this includes banks, insurance companies, brokerages, credit cards. Do I like this sector? Yep, I like this sector, okay? But bear in mind that finance sector is not high growth. They are moderate growth and they can go through quite big ups and downs. So you must know exactly when to buy them. So I tend to only buy banks. I buy credit card companies, for example, only when they are very undervalued. And you must know when to sell them to take your profits at the top of the cycle before they come back down again. So my favorite financial stocks would be JP Morgan, Bank of America, Goldman Sachs, asset managers like BlackRock. But again, doesn't mean you buy now. Now could be a wrong time to buy. Okay, all right. Next will be energy. So energy companies are involved in oil and gas and now increasingly renewable energy, which is, some people say, is a huge growth industry, which I agree with, but it's something that I'll never invest in. That's right, I'll never invest in energy. Why? Because oil and gas prices are very unpredictable. And so these companies, their profits are very volatile and unpredictable as well, very competitive, very high capital expenditures, very low profit margins at times, so I avoid energy at all costs. Okay, and later when I show you the long-term performance of these sectors, you would see why I avoid energy. You would see why I avoid basic materials. And this is important because, I notice there are many investors out there and they don't know this, right? So they end up buying a lot of energy companies, a lot of material companies, a lot of utility companies, and they're wondering why they can't beat the market. They're wondering why their portfolio is so volatile compared to the market, right? Next would be real estate. So real estate sector includes property developers, property management companies, and REITs. Now, do I like real estate? Yeah, I don't mind it, okay? But I don't buy developers. I don't like developers because I think that it's a very competitive business. But I like REITs, real estate investment trusts. Because when I buy REITs, I'm owning real estate and I get rent from the real estate, okay? So these are the cyclical sectors. Again, I buy them only when they are near the bottom of the cycle. And within cyclical, my favorite would be finance and industrials, right? So industrials, I wouldn't say it's my favorite. I don't mind buying them once in a while when they're really cheap. So industrials we include companies that manufacture machinery, handheld tools, industrial products, aerospace and defense. What I don't like about industrial companies is they have high capital expenditures and physical assets, which I don't like because there's a lot of depreciation costs related to these kind of physical assets that they have to keep being replaced consistently, and it sucks up their cash flow. So generally I don't like industrials that much, but I will buy some companies when they are really cheap. For example, Lockheed Martin, which is in aerospace and defense, 3M, which you guys know they do almost everything, and Honeywell, okay? But I would say among all these cyclicals, my favorite would be finance. The rest, like industrials, okay, the rest, no, I won't touch these two. Now, finally, let me talk about my favorite third part, which is what I call secular growth sectors. So these are sectors that they are both kind of recession proof nowadays, plus they have got high growth. So they kind of have the best of both worlds. So you notice that the majority of the stocks I own are in the secular growth sectors. So what's in the secular growth sectors? Number one, technology companies, obviously, right? So these are companies engaged in the design and development of computer applications, computer equipment, components, software. So again, companies like Apple, Microsoft, Salesforce, Adobe, PayPal, okay? Next, consumer discretionary, also known as consumer cyclical. So they are a bit cyclical, but moderate, but they have got high growth. So this sector includes retail stores, like I mentioned, Alibaba, Amazon, these, Mercado Libre, right? These are under consumer discretionary. It includes residential construction, restaurants, entertainment companies. So again, McDonald's, Yum Brands, Nike, Home Depot, these are consumer discretionary. And finally, we have got communication services. We are in the communication age, so we have to communicate every single day, pandemic or no pandemic, rain or shine, okay? So what are my favorite communication companies? Facebook, can't do without Facebook. Alphabet, that owns Google and YouTube. And of course, you've got Disney as well and Netflix. So again, these are the three secular growth sectors because they tend to be recession-proof, pandemic-proof with high growth. And the majority of my stocks are within these sectors. Again, let me make a disclaimer. It doesn't mean that an investor should buy these stocks right now because again, may not be the right time. We buy a great company only when it's undervalued, and some of these companies are not undervalued yet, right? But when they're undervalued, they're great to buy. Okay, so how have these sectors performed against the S&P 500 over the long run? Let's take a look. So on this chart, you can see this is a 10-year chart from 2010 to right now about 2021, about 11 years, okay? And what you're seeing is the S&P 500, which again, if you just buy this, you get about 11% to 13% a year. No brainer, okay? But we want to beat the index. We want to beat the market. So which sectors would have beaten the market? Let's begin with the defensive sectors. Do you remember the three defensive sectors? You have got utilities, consumer staples, and healthcare, right? Okay, let's put that in right now. Let's put in the ETF. So first, let's put in the utilities sector. The ticker symbol is XLU. And again, this is an ETF that you could buy, all right? So XLU, there you go, utilities. So we put that in, and that's the one in orange. So you can see that in the long run, if you invest in utility companies, you would get much lower results than the S&P, because utilities are low growth, very competitive. Like I said, I don't like this sector at all. That's why I don't buy it, okay? Next would be consumer staples, which are consumer defensive companies like P&G, Coca-Cola, Pepsi, Kimberly-Clark, right? Okay, Clorox. So this is XLP, consumer staples. So put that in, boom. And you can see that in the long run, consumer staples underperforms the S&P as well. Like I told you, it is low growth. But having said that, I do have a few stocks that are within this sector. Why? Because it is recession proof. That's right. So you notice that during the past crashes and recessions, although this sector doesn't grow as fast, but they tend to go up during a recession. So they kind of like defend your portfolio. So it's good to have some of them within the portfolio. The third one would be healthcare, which is one of my favorites. So let's put in healthcare, XLV, healthcare. Ready? Boom. What do you notice? Notice that although healthcare is a defensive sector, which means it's recession proof, it beats the S&P in the long run. So it's one of my favorite sectors, right? So it is low volatility and it's a fantastic performer as well. What's there not to love? All right, so those are the three defensive sectors. Next, let's put in the cyclical sectors, which I don't really like, right? So first would be energy. I hate energy. XLE. This is the energy sector, XLE. Let's see how this is done. Boom, let's put it in. There we are. Energy sucks big time, right? Waste of time. Next would be materials, XLB, or commodities. Very, very volatile, all right? So materials, you put that in, boom. Okay, in terms of long run performance, it is not bad. It is still below the S&P, but I don't like this sector because it's very volatile. Okay, so that's XLB. Okay, what else? We have got real estate, right? XLRE. So let's put it in, XLRE. Now, bear in mind, real estate ETF has not been around for 10 years. It's only been around for 5 years. So if you look at a chart, you can only compare it from 2016 onwards, right? So XLRE, let's put it in. There we go. So XLRE is there. Again, it's not fair to compare on a 10-year. You have to drag this to where it started in 2016. And you can see that the real estate has also underperformed the S&P. So real estate, very cyclical, again, not the best performer, right? Okay, let's go back to the 10-year chart there. Okay, what else do we put in? We have got industrials, that's right, industrials, which I said I don't mind, some companies which are not bad, but I only buy them near the bottom of the cycle. So industrial is the one in green. So in the long run, it's not bad as well, but it still underperforms the S&P. Okay, and finance. Let's put in finance, one of my favorites, financial sector. Boom. Okay, so in the long run, you can see, like I said, finance is not a high growth sector. It's a moderate growth. Again, it underperforms the S&P, but I love to buy finance companies when they are very undervalued, when they are deeply undervalued. Okay? Okay. Finally, let's look at the secular growth sectors. There are three of them, and these are my three favorite ones. Do you recall them? Technology, communications, and consumer discretionary. Let's put them in. So first, technology. So technology is XLK. XLK. Let's put that in. Boom. Hallelujah. Look at that, ladies and gentlemen. So you can see technology, the one in pink, outperforms the S&P by a wide margin. So you can see why the majority of my stocks have always been in technology to beat the market. Okay. Next would be consumer discretionary, which is XLY, right? XLY. So again, Nike, Amazon, eBay, these are discretionary companies. Let's put that in. And you can see discretionary is also a great performer in the long run, outperforming the S&P. Finally, let's put in communications, XLC. But the communications ETF has only been around for 2 years. It was just created. So we can't compare it on a long-term chart. It's not fair. But I'll just put it in anyway, XLC, communication, right? And you can see that we can only compare it in a shorter time frame, which I'll show you in a while. Now, the point I'm going to make right now is this. In the long run, the best performing sectors are, number one, technology. Number two, consumer discretionary. And number three, healthcare. These are the three sectors that beat the market over the long term. And if you look at communications sector, it is also one of them, but it was just created, so you can't compare it over a 10-year time frame. Okay, so I hope this has been useful. I hope that you've learned something. And again, remember, 4 keys to investing: knowing what to buy, when to buy, how many shares to buy, and finally, when to sell. That's how you beat the market consistently. I'll see you in the next video. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.